Hey everyone, welcome back! Today we're diving into tax breaks for renters. Yes, renters can get tax breaks too. Many think homeowners get all the tax perks, but that's not the full picture. Renters can lower their tax bill or get a bigger refund by knowing where to look. Spending a little time understanding these deductions could put hundreds or thousands back in your pocket. We're talking about real money you can use for anything you want. So in today's video, I'll break down 5 specific tax breaks for US renters. We'll explain what they are, who qualifies, and how to claim them. No complicated jargon, just straightforward info to help you save. Stick around until the end to catch all these opportunities. Let's get right into it. Let's kick things off with the renter's credit, a valuable but often overlooked benefit for renters. This isn't a federal credit, but is offered by certain states to provide tax relief to renters. Each state has its own set of rules and eligibility criteria, so it's important to understand what applies to you. It's aimed at lower to moderate income renters with income caps and other criteria. These programs are designed to help those who need it most, making housing more affordable. Check your state's Department of Revenue website for eligibility. This is the best place to get accurate and up-to-date information. A quick online search for your state renter's credit will give you the info you need. Make sure to use reliable sources to avoid misinformation. The amount you can get back varies by state, from modest sums to several $100s. This can make a significant difference in your annual budget. To apply, you'll need proof of rent paid, like canceled checks or rent receipts. Keeping these documents organized will make the application process smoother. Keep meticulous records of your rent payments throughout the year. This will not only help with the renter's credit, but also with any other financial documentation you might need. Some states might call this credit something different, like homestead credit for renters. Be aware of the different terminologies used. Understand the intent behind the program providing tax relief to renters. This can alleviate some of the financial stress associated with renting. Check if the credit is refundable or non-refundable. A refundable credit means you get money back, even if you owe no state income tax, which can be a huge benefit. A refundable credit means you get money back, even if you owe no state income tax. This can be a crucial factor in maximizing your benefit. These programs can change, so check each tax season. Staying informed will ensure you don't miss out on any benefits. Your landlord likely deducts property expenses, and the renter's credit acknowledges your financial burden. This is a way for the state to recognize and support renters. As soon as you're done watching, search for renters' tax credits in your state. Taking action now can lead to significant savings. This is one of the most direct and easiest tax benefits for renters to claim if they qualify. Don't miss out on this opportunity to reduce your financial burden. Don't leave free money on the table. Make sure to explore this option and take full advantage of the renter's credit available to you. Next up, the home office deduction. This is relevant for self-employed individuals, freelancers, or gig workers. The space must be used exclusively and regularly for your business. It can't be a corner of your bedroom or the kitchen table. It needs to be a clearly defined area dedicated solely to business activities. You can deduct the business percentage of expenses like rent and utilities. There are 2 ways to calculate the deduction: simplified and regular methods. The simplified method allows a $5 per square foot deduction, up to 300 square feet. The regular method involves calculating actual expenses based on the percentage of your home used for business. This method requires meticulous record-keeping but can result in a larger deduction. The deduction cannot create or increase a business loss for most people. For renters, this is a fantastic opportunity to write off a portion of your rent. Imagine writing off 10 to 20% of your rent for a legitimate home office. The IRS scrutinizes home office deductions, so keep excellent records. Take photos of your office space, save your lease agreement and utility bills. If you're unsure, consult with a tax professional. This is one of the most powerful deductions available to self-employed renters. Let's move on to the moving expenses deduction. For most taxpayers, this deduction was suspended by the Tax Cuts and Jobs Act of 2017. However, it's still available for active duty military members moving under orders. If you have a permanent change of station, PCS, you can deduct unreimbursed moving expenses. This includes costs like hiring a moving company, renting a truck, and packing supplies. Travel expenses for yourself and your family are also deductible. Keep track of your miles if you drive your own car. The expenses must be reasonable and closely related in time and place to the start of your new duty station. To claim this deduction, use Form 3903 Moving expenses. Report your total moving expenses and subtract any reimbursements. The remaining amount is your deductible moving expense. Save every receipt related to your move. This deduction is currently only for active duty military members moving due to a PCS. For all other renters, this deduction is off the table at the federal level for now. Some states might have their own rules for moving expense deductions, so check your state's tax laws. This is a key benefit for military families navigating relocation. Track all unreimbursed costs if you qualify. Stay informed about potential future changes to tax laws. Let's talk about energy efficiency and how it can benefit renters. Federal tax credits for energy efficiency are typically aimed at homeowners, providing them with incentives to make their homes more energy efficient. Renters don't own the property, so major upgrades like insulation or solar panels are usually the responsibility of the landlord. However, some states or utility companies offer rebates for Energy Star appliances, which are designed to be more energy efficient. If you buy an energy-efficient appliance, you might qualify for a rebate which can help offset the initial cost. This isn't a tax deduction but still saves you money in the long run by reducing your energy bills. The Federal Energy Efficient Home Improvement Credit is specifically for homeowners, not renters. If your landlord makes improvements to the property, they might be able to claim the credit, which could indirectly benefit you. A more energy-efficient apartment means lower utility bills for you, making it easier to manage your monthly expenses. Some landlords might be open to working with you on energy-efficient upgrades, especially if you can show them the long-term benefits. Focus on behavioral changes that save energy and money, such as turning off lights when not in use and adjusting your thermostat. Use smart power strips, LED light bulbs, and program your thermostat wisely to maximize energy savings. Check for state or local programs and utility company rebates that can help you save even more. Direct federal tax credits for major energy efficiency installations are tough for renters to access, but there are other options. Look for state or local programs and utility company rebates that might be available to you. Check your state's Energy Office website or the DSIRE database for programs that can help you save on energy costs. Focus on what you can control and advocate for energy efficiency with your landlord to create a more sustainable living environment. Make smart energy choices in your daily life, from the appliances you use to the way you manage your home. Look for local rebates or programs that might apply to items you purchase, such as energy-efficient light bulbs or appliances. The overall financial and environmental benefits of energy efficiency are within reach, even for renters. By taking small steps and making informed choices, you can contribute to a greener future while saving money. Finally, let's talk about the state and local tax deduction, or SALT deduction. This is a significant topic for many taxpayers, especially those living in high-tax states. This deduction allows taxpayers who itemize deductions to deduct certain state and local taxes from their federal tax return. It's a way to reduce your taxable income by accounting for the taxes you've already paid to state and local governments. Renters don't pay property taxes directly, but there are still ways to benefit from the SALT deduction. While homeowners can deduct property taxes, renters can look at other state and local taxes they pay. The SALT deduction is capped at $10,000 per household per year. This cap includes all state and local income taxes, property taxes, and even sales taxes. This means that if your combined state and local taxes exceed $10,000, you can only deduct up to that amount on your federal tax return. Renters can benefit by deducting state and local income taxes paid. This is particularly useful for those who live in states with high income tax rates. Alternatively, you can choose to deduct state and local general sales taxes instead of income taxes. This option can be beneficial if you live in a state with no income tax or if your sales tax payments are higher. You can use actual expenses or IRS sales tax tables to determine the amount you can deduct. The IRS provides tables that estimate the amount of sales tax you paid based on your income and family size. Renters can't directly deduct a portion of their rent as property taxes, but they can still find ways to benefit from the SALT deduction. Some states offer property tax equivalent credits for renters. These credits can help offset the cost of rent by providing a tax break similar to the property tax deduction homeowners receive. These state credits are separate from the federal SALT deduction and can provide additional savings on your state tax return. The SALT deduction for renters is primarily about state and local income or sales taxes. It's important to keep track of all the taxes you pay throughout the year. To benefit from the SALT deduction, your total itemized deductions must exceed your standard deduction. This means you need to add up all your deductible expenses and compare them to the standard deduction amount. Many renters find they are better off taking the standard deduction, especially if they don't have a lot of other itemized deductions. However, if you live in a high-tax state, itemizing might be worthwhile. High state and local taxes can quickly add up, making the SALT deduction more valuable. Keep track of your state tax payments and any estimated state taxes you pay throughout the year. This will help you maximize your SALT deduction. The SALT deduction can still benefit renters who itemize their deductions. It's worth exploring all your options to see how you can reduce your tax bill. Always run the numbers both ways to see which option saves you more money. Comparing the standard deduction to your itemized deductions can help you make the best financial decision. Keep an eye on potential future changes to the SALT cap. Tax laws can change, and staying informed can help you take advantage of new opportunities. Stay informed and consult with a tax professional if needed. They can provide personalized advice and help you navigate the complexities of the tax code. And there you have it, folks. 5 legit tax breaks for U.S. renters. We covered state-specific renters credits, the home office deduction, the moving expenses deduction for military, energy efficiency perks, and the SALT deduction. Hopefully, this breakdown empowers you to look into these potential savings. Every dollar you save on taxes is a dollar towards your financial goals. Tax laws are complex and always changing, so do your research or consult a tax professional. Don't assume you don't qualify for anything because you're a renter. There are opportunities out there, you just need to know where to look. If you found this video helpful, give it a thumbs up, subscribe, and hit the notification bell. We're always bringing you actionable information to make a real difference in your financial life. Thanks for watching, and we'll see you in the next video. Save money, build wealth, and navigate personal finance with us. See you next time.